going on, everyone? In this video, we're going to go over a very simple trick that I use. It's a simple concept and it's a very simple mental tip that's going to help us maximize our gains. It's going to make us avoid stupid trading losses that destroy our accounts. And we're going to take really good trades based off of what the market's giving us. And I can guarantee that if we do these things that I'm going to go over in this video, our trades are going to be 10 times better than what they're at right now. But before I begin, all I ask is if you could just take 5 seconds, drop a thumbs up on this video. It'll help spread the message out to others in the community. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks. The link to this is in the description. You're definitely missing out if you aren't following it. Now, let's get right into the video. Before we get into how I made 50% in trading the Qs and the whole thesis behind the trade and the technical side behind the charts, we first have to understand a couple key points that's going to be the foundation to this video. So what a lot of people struggle with is they don't do what the market's telling them. A lot of people, they come into the market like big shots. They have a huge ego. I'm prone to this as well. And it costs them a lot of money. They think they're a good trader. They could wake up from their bedroom, make thousands of dollars. It's possible, but your ego, by you having such a large ego, it's gonna mentally and subconsciously affect your trading decisions. And in the long run, it's gonna cost you a ton of money. The market doesn't care about your feelings. I could tell you that for a fact. There's a million other participants in the market. The market will always be smarter than you. Your ego should be the last on the list. Always understand and always accept that the market's always going to outsmart you. And you also have to understand that it's a storyteller. I say this all the time to Invest to Trade members. The market is a storyteller. Act like you're a kindergartner, sitting in front of the teacher, listening to the story. And your job is to interpret what chapter it's on, understand the story, and understand the context behind what the storyteller is telling us. The market is a really big story. It's completely unstructured, and you have to develop some type of context and develop some type of story backing what it's telling us. Now, a good way to gauge this is to compare last week's action, compare yesterday's action, compare the action that we're seeing so far intraday. There's a lot of different clues, and your job as an intraday trader, even a swing trader, is to identify these context clues and adapt to them and come up with your own story. And your own story is going to lead you to an actual trade that you could put on that's backed by reasoning. Now, you have to come up with a plan. You have to be flexible enough to adjust to the market's current story. I post plans in my Discord every single day, but we have to be flexible because nobody could predict the market. No one can know what's going to happen next. We have to come up with a little bit of a guideline, and we can't just sit there like a statue. We have to bend a little bit and be flexible because the market's changing, different dynamics with price, different dynamics with volume, and we have to be able to adjust. And that, by being able to adjust, we got to do what the market's telling us. We have to trade based off of facts, not opinions. We're going to break that down in the charts in a couple seconds here. And you also have to focus on the best setups. I see traders, trading 20 different things in a single day. If it works for you, good for you. But for me, I focus on the best ones. I focus when my edge is present. I focus on the setups that I know makes me the most money. Every trade needs to have a thesis backed by valid confirmation. If the market's moving up, it doesn't mean you could get into the trade. If the market's moving down, it doesn't mean you could play, to the downside. You have to have a solid reason, and price moving in a single direction is not a solid reason. You have to take the context out of the storyteller and come up with your own story and your own plan for you to have a trading decision. Now, the fun part, going over charts, breaking down the context and the story that the market was telling me so you all could understand it a little better. We're going to go over some trades that we took in the Discord, and we're also going to break down the trade that I took on the Qs today. So from the pre-market plan, this is where my structure, my context before the market opens up comes into play, and then I have to interpret what happens intraday and what price is currently telling me in relation to volume and in relation to price itself. So we had supply at 135.11. It's going to set the tone for the remainder of the day. I'm not seeing any sell activity inside this yet. So I don't have too much conviction into the short side. If we sell off, we have demand below. But to the upside, if we slice through the supply like it's not there, we base inside the supply at 13614, 13659 that I talked about in the webinar last night should act like a magnet to price. So you all know, if you've been following me, I chart the /NQ, the E-mini NASDAQ futures, and I trade the QQQ options off of this chart without looking at the Q's chart. I also trade off of supply and demand imbalances, and the key at a supply zone is you look to take the market short, and the key at a demand zone is you look to take the market long, as these are imbalances based off of an existing area on the chart that we look for price to test again and those participants to respond to price. So just because we are at a supply zone does not mean we take the market short. We have to identify what the market is telling us. So because we didn't have any sellers really present in the market before we opened up, and we were watching for it to slice through, let me maximize this. So we were watching for the market to slice through. If we got above the supply or we acted like it wasn't there, that's going to tell me A, buyers are very strong, or B, sellers are not, they're sleeping still, and price may want to gravitate to the next nearest supply above, and we could look to take the market long. So not only did I have that analysis, but I also had analysis from last week. If I pull up chart, where supply zones last week got blown through because either sellers were sleeping or buyers were very strong. And we're not going to know the answer to that unless we develop more context in the future days. And if I had to guess, I would just say buyers are very strong compared to what we saw today and compared to what we saw on Thursday and Friday. So because of last week's action, I knew this week if we blew past supply, we probably would continue to rally. So that's what my whole thesis and my whole thought process was. We had nice pullbacks into demand and we rallied last week. So we were watching the same thing today. We had the supply zone with no selling activity. And once eventually we got above this zone, majority of underlying equities were very strong as well. Tesla was very strong, bouncing off demand. Roku was very strong. So a lot of other things were moving up. And what I liked here was that we held above the supply zone. We're obviously above it, so it becomes invalid. However, we were flagging, we were consolidating, and I love to see consolidation hold near a high, hold near a trading range, because it gives me defined risk and it gives me a proper area to speculate that new demand is going to form if we do move up. So the market moved up, we consolidated in this area. At this point, like I said, majority of underlying equities were strong. So buyers that bought in the first 10 minutes of the market open were factored in that any pullback down, they should have held and defended their long position. And if it's better that we're basing near the highs. So all I did was wait for, there's two ways you could trade this. The way I traded it was as soon as this 10 o'clock candle opened up, you all know me, I don't like playing high day breaks, but if the context is there, I was telling members that this 13614 supply zone from the pre-market plan should act like a magnet. We sliced through it. I took the QQQ 332 calls at 10 o'clock. And around the price was around 52 cents was my fill price at this point right here on the contracts. Now we came up past high a day. Look at the beautiful volume. That's what you want to see when the market's moving up. We also had an upper trend line that price was stalling nearby. Really no signs of any selling activity today. And we got a quick push into the supply zone that acted exactly as we planned, like a magnet. And at 10:13, I scaled out my full position right over there at 73 cents. So it was a 21 cent gain on a 50-cent contracts. It was a little over 40% or a little under 50% return in a matter of 13 minutes. So a very fast trade. The trade worked out pretty much right away in my favor, and just simple analysis, understanding where buyers are factored in, where sellers are factored in, compare it to last week. Is it on the same story? Is it on a different story? And you could take trading decisions based off of this. So now we're inside of the supply zone. The market died down after the first hour. And after this, there was really nothing going on. We were consolidating near the highs. We did minor reject the supply zone for about 30 or so points. Nothing to it here. I was telling members to avoid this to the short side due to the context and due to how strong buyers were today, how strong buyers were overnight, and how strong buyers were last week. There was no reason to short this supply zone because of that context. And if we sold off and came back, it might be a different story. But I always use the analogy of act like you're on a train track and you see a train coming at you, right? Things moving fast, things moving up, keep coming up. And, we'll come up to a supply zone. You're thinking about shorting it, right? Just let the train go past you, step off the track, and when it moves past you, you could get back on the track. Same thing with this. No reason to fight the trend. Very strong buyers. And eventually we just consolidated. We moved up. And end of the day, we ended up pretty flat. So now tomorrow we're going to adjust. We're going to come up with a new plan. We have buyers factored in. We have some sellers factored in. And we're going to take trading decisions based off of this analysis. So it's really all about just doing what the market's telling you. There's no predicting. There's no saying, oh, when we become above this level, I'm going to play calls. When we go below this level, I'm going to play puts. It's all about being reactive and interpreting what the market's giving us. No one knows what's going to happen next. So we have to put the story together and we have to put the clues together. Tesla bounced off of demand. We had buyers here. They came up and they rallied us above this resistance and this neckline from an inverse head and shoulders. We consolidated above it just like NQ. I mean, this chart is identical to it. And then eventually we came up, started moving up, lower volume. As soon as volume started coming in, nice little all-day runner right from above resistance, right from demand. That's the story the market was telling us. Buyers were strong. The market NQ was strong just as well. So don't predict. Be reactive instead. Put the pieces together. Formulate your own style, your own plan, and your own edge. And then you take trades based off of that. Now we're going to go over Boeing. This was from last Friday. We are watching for strong buying volume to hold above 230 to 232. We're going to watch the play calls targeting the 236 supply zone. So Boeing opened up on Friday. We sold off. Nice opening volume. We came into this demand zone at 232, 231 area, and a beautiful rally from this zone all the way up into 236 supply. So a couple things here. We have strong buyers at demand. Beautiful trade. I remember members did take this on Friday. Made very good profit. Came up. No reason to sell at all until we hit supply where the market starts consolidating, trading sideways, and then we get a quick push down off of this supply zone. So not every day does it happen. It moves from demand to supply. This is a textbook, 10 out of 10 setup. So from demand into this, and we sell off. So now we have buyers factored down here at demand. Price pulls back into this area. We find the same buyers defend that area, and they have intention. They get rewarded. The market does move up. So now it's safe to say we have buyers again in two areas. First area, then the second area. So, this doesn't count as a demand zone, but this just counts as an area that we're going to be watching for these buyers to defend it if we come back and, test that. If those buyers, if they have an agenda to keep pushing the market up, we want them to hold it. So now the weekend, the market closes. Closed flat on Friday, actually into this supply zone and sell off about $1.50 before the market did close. So perfect, from demand to supply. And today on Monday, the day I'm recording this video, we had the same 236 supply zone. And look at that area that we wanted buyers to defend, a key area, a key level at 233. They defended that. The buyers were factored in. We came into the supply zone. So if you were long here, this would be a good area to either scale out, or if you weren't long, you would want to see sellers try to hit the market and bring it lower. So we briefly got a push down from supply for about 2 points. Not a bad move. The contracts really didn't move as well either. But now we have sellers again priced in at 236 two different times. So now if we start moving up, these sellers are underwater. They're going to be in pain. And when there's a lot of pain, there's going to be a lot of gain for the opposition. We got a very strong push above 237, above 236. Now we have sellers underwater, and we have those buyers really getting rewarded to the upside. So I'm going to end the video here. If you did enjoy, smash that like button. If you have any questions, comment. I'll answer them as best as I can. And if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that comes with access to my Discord as well. Besides that, I'm going to end it. Peace out.